Hey guys, welcome. Come on in, Go ahead and grab pen and grab pad. We are going to get started shortly, but go ahead and grab pen and grab pad, guys. This is Terrence Hawkins. My pleasure to be with you this afternoon. Go ahead and grab that pen, grab that pad. We are getting ready to get started. Hey, let me know where you're calling from, guys. Yeah, Knightdale, North Carolina. What's going on, Georgia? Okay, Thomasville, Georgia, that is. Charlotte, North Carolina. Concord, North Dakota. West, welcome. They're kind of North Carolina, North Dakota, right? Raleigh, Jatasha, how you doing? Welcome. Grab pen, grab paper, guys. You're going to learn something, guys, about the number one secret, guys, in saving some money and some taxes. That's what we're going to talk about. We're going to get started in less than a minute. Those of you that are sharing this to your pages, you can go ahead and actually share now. You can go ahead and start your watch parties now, because we're going to go ahead and get started. Everybody continue to go. I'm not going to have you on long, but we're going to actually get started. Go ahead and start your watch parties now. Welcome. Let me know you're here. Come into the room. Post your city and your state. Let everybody know you're here. Hey, Sheila, back from Charlotte. Tante, what's going on, buddy? How those girls doing? Youngsville, North Carolina. Welcome. Grab pen, grab paper, guys. We're getting ready to save some people some money. The number one secret, guys, to saving money on your taxes. That's what we're going to be going over today, guys. Come on in. We have less than a minute to actually start it. 30 more seconds is going to actually get going, guys. Actually, we're going to go and get started. All right, guys. I want to thank every one of you for actually joining us on this afternoon. Thank you for actually joining us, guys. My name is Terrence Hawkins, guys. My pleasure to be actually coming to you this afternoon. I'm coming to you guys from Charlotte, North Carolina. Hey, Tevin, how you doing from Baltimore? What's going on? Welcome, guys. Those that are shared this on your page, thank you. Go ahead and actually share those on your page. Hey, Michael, what's going on? What's up to you also as well. Houston, I've got a lot of individuals actually all around, guys. Let me go ahead and show you some of those. Pam is actually saying hey from North Carolina also as well. Sheila's actually saying hey from Charlotte. We got Tasha's and good evening. She's all the way in Raleigh. We got Sheila's back in Charlotte also as well. Tante, what's going on? One of the nephew is over there in North Carolina as well. Baltimore is in the house. What's up, Michael? How you doing? What's going on? We got Sean. Hey, what's up, Pratt? From all the way from actually Texas also. I'm going to stop there, guys. I'm going to continue to go on, and it's going to be on and stuff again as they keep going. We're just going to get rid of that, right? We thank you guys for actually joining us, though, guys, because that's actually the main thing, okay? Thank you for actually joining us. Those of you that hadn't heard actually for the first time, guys, you may want a pen and pad. You may want a pen and you may want to pad, because I'm going to go over a lot of information. You may want to jot down some notes that you may have, okay? You may want to jot down some notes. Some of you guys, I would try to answer some questions if you want to do it on the feed. Okay, if you want to do it on the feed, I will come back and stuff and answer some questions for you as well. Guys, I'm there, but we're going to have you on, we're going to have you off, guys. Okay, you know, my hope on tonight, guys, if you basically understand the number one tax rate that you may be able to have, everybody have, and then position you guys so that you can take advantage of that. You too should be saving a lot of money on taxes. It's not just for the wealthy individuals and not just for people that you just heard about. You should be able to save a lot of money in taxes as well. All you need, guys, is to understand some of the strategies. And that's what we teach, all about strategies and stuff about doing that. And I'm going to go through that as well. But for those that do not know me, I always like to actually do an introduction. For those that do not know me, I don't want to assume that you do know me, right? My name is Terrence Hawkins, guys. I am the proud founder of Hawkins Accounting and Tax Service. My wife and I run the business now, guys. We've been in business for 24 years, 25 years this coming January. Absolutely excited about that. I have been doing taxes since I was at the young age of 15 years old. My father taught me how to do taxes. I am 49 years of age now. Don't know about a lot of things, but I tell people I do know a little bit about taxes. Okay, I love taxes. Been doing it for a long time. I'm also an enrolled agent with the IRS, and many individuals have never heard about enrolled agents, so I'm going to put the definition up there, guys. Enrolled agents, some call us America's tax expert. Here's why, guys. We are the only federal licensed tax practitioners who specialize in taxation and also have unlimited rights to represent clients. That's you, okay, before the IRS, guys. We do it in all 50 states, all right? Enrolled agents are required to complete many, and I mean many, hours of continuing education each year to ensure that they are up to date on the constantly changing tax code. And we know that they're changing all the time, right? And we must abide by the code of ethics, okay? When you need a true tax professional, you may want to actually see an enrolled agent, okay? I'm also, guys, are a part of the National Association of Enrolled Agents, part of the North Carolina Society of Enrolled Agents, and I'm proud to be a part of the American Society of Tax Problem Solvers. So if you have problems with tax issues, there I am. But guess what? I'm also an alumni, okay, of the University of North Carolina, Charlotte. I got my accounting degree there. I sat on the alumni board for years. I'm currently on the Belk College Business Council right now, where I help giving back. Always have to get back, guys. But I'm most proud of, guys, the education that I just love to get. People that know me understand that I love education. Okay, I love education. Okay, Ronaldo said, "Can you do Florida next?" All right, man. All right, but I love education. So I go throughout the country, guys, doing education and seminars and training stuff. Not doing right now. I'll do what I am right now, guys. But also been a part of the radio, guys, on ESPN Charlotte. I'm Coffee and Cash Flow, the game where I educate about what I'm talking to you about right now. Okay. Giving people the understand about a little bit about taxes, okay, so that you can also be in that playing field. You can be in that family. Taxes is coming out of your check every single time, okay? It's coming out, guys. A third of our monies is going towards some type of tax, right? Some type of tax, not just federal tax, not just state tax, but you also got what? Property taxes out there. You got sales taxes out there, guys. Even when you pass and you're gone, some people have estate taxes out there, right? It's always staying with you, guys. A third of your income going towards tax. So if you ever want to look at your cash flow and look at things going on, one of the things that you need to start looking at is taxes. You have to start looking at taxes. I tell people all the time, you know, taxes was one of those things that if you would have handled some tax issues, some people would never been able to get into financial issues. Because if you had an extra $300, $400, $500, $600 even a month coming to you because your taxes was lower, you could have used that money to do something else. How many people agree to that? Go ahead and chat it up. Guys, if you don't know me, I like feedback. We in and out of here, right? You can chat it up in there, okay, actually with me. But you would have, right? You would have been like, oh, you know what? I didn't have to pay this. I got this. That bill is taken care of, okay? I'm able to actually put this into my retirement plan, right? I'm able to do certain things with the money if you kind of focus on the taxes. So we're not going to get mad at who's paying less and who's paying what percentage of. We're going to work on you. We're going to say, you know what? This year we're going to position ourselves to take advantage of taxes. Okay. And to do that and do yourself, guys, I traveled throughout the country proving this and talking about this all since my father actually talked to me about it, guys, a long time ago. And that is this: the bottom line. There's a bottom line whether you like it or you don't. Okay. The bottom line is simply this: if you do not have a home-based business, you are paying too much money in taxes. Guys, this is what I prove throughout the country. I prove it throughout the country. Some people say, no, Terrence, I can do this. No, I prove it always. If you don't have a home-based business, you're paying too much money in taxes. Because how many people actually know, just by even thinking, you might not even know like I know, but just by thinking about it, how many people can probably agree to saying, hey, you know what? Our tax laws, current tax laws, and the past tax laws we already been to, right, favors the business owners. I didn't say it was written for the business owners because we all got to pay it, right? All of us not in business. But doesn't it seem like it favors the business owner? Doesn't it seem like the business owners get so many different other types of deductions and credits that the normal average person do not get? And that's true. And it's for a reason, okay? It is for a reason, right? Guys, the Internal Revenue Service, okay, and our government basically passed several laws just to be able to do this, to create the opportunity for the home-based business owner, because they wanted to boost the economy. They wanted to boost the economy. So, and boost the economy, well, there's one reason, to boost the economy, guys, with tax deductions and things of that nature, and to make sure that people are able to survive themselves. Because if you lose your job and you don't have money coming in, if you had a home-based business there, you can basically supplement some things, can't you? So the government came and said, you know what? Let's basically put some things in place to basically help people to realize that they need to get a home-based business, because if the market and everything drop, as a recession happens, we don't have to do but so much because they got money coming in from over this side. Now, that's what happened. But isn't that what we're going through right now? Isn't that kind of what we're going through right now? Many people have lost their jobs and paycheck to paycheck. I mean, kind of strapped on what's going on, don't know what to do. And the government is sitting up there fighting on this, trying to decide, are they going to give additional help or not? Are they going to give money or not? And if they're going to do so, how are they going to do it? A couple of years ago, months ago, they said, you know what, we're going to get this big stimulus. We're going to give everybody some extra money, all through taxes. But the home-based business was started in that thing, guys, okay? It was started for that reason, to do it. So in doing that, your home-based business or home-based business is just like a major corporation. So a lot of times people actually think, oh, I got time to do this. I don't want to have this. Guys, you must make time for a home-based business. Because it's just like, you had a major business. The law is the law. A LLC can be a home-based business, and an LLC can be a major corporation. There's a major grocery store here in this area in Charlotte, North Carolina, and a lot of people didn't realize that that grocery store, that chain that goes all the way down to the East Coast, is an LLC. It's an LLC. But some people say, well, I have one person LLC, just me, but an LLC is an LLC. Another LLC just got multiple partners. But to the Internal Revenue Service, guess what? It's a business. Same laws, things that you can do with that. Okay? Welcome, Seattle. Okay? All right? Things that actually you can actually do from that. Right? So you want to basically be able to be in position to take advantage of the laws that you can take advantage of legally and ethically. And you just have to position yourself to do so. Guys, it's really not how much sometimes you make that really counts. It's really how much you keep. If somebody's making $100,000, another person's making $100,000, they're not treated equally. If one of them is a business and then one of them is not treated equally. Because your W-2 employees are getting taxed heavily with no real deductions anymore, hardly, right? It used to be people just say, well, I get to itemize, let me get a house, let me do this and that. Well, guess what now? Since the laws have changed, only 90%, only under 90% of the people do not even itemize anymore. They're taking the standard deduction. So only 10% of the people are really taking that extra anymore with the houses and everything else that they have. Only 10%. So what are you going to do? What can you do? Okay, home-based business are always better then. It's even more important right now. And guys, yes, I do these Ash Talk every single week right now. Why? To basically be able to push a message, that you must have a home-based business. Now, a legitimate home-based business have three things that the IRS actually said, okay? Three things, okay, that the Internal Revenue actually said. The Internal Revenue Service says that number one, you must have the intent to generate a profit. You must have the intent to generate a profit. Now, you don't have a home-based business just to say, I want tax deductions and they help me out. A business is in business to make money, okay? So you got to have the intent to generate income, right? Then number two, you must actively participate in the business. See, that's the big difference between an active business owner, home-based business, and an investor, okay? One is passive, okay? And one is an active participant. You must actively participate in the Internal Revenue Service that basically, on average, 3 to 5 hours a week can legitimately be a home-based business. 3 to 5 hours a week. You have 3 to 5 hours a week. How many people got 3 to 5 hours a week? I wouldn't even say that. I would just say, how many people watch some type of sporting activity this week, whether it is football, whether it's the basketball game, or whether you watch the debate, or whether you're going to watch the debate, or whatever it is. Come on. Okay? Come on. So when you actually look at that, guys, you have to actually realize, you know what I'm saying, that you have the time to do it. This is the right one. You have the time to do it. It's the intent to generate a profit, actively participate. And then the last one, you must keep records. You must keep records. Okay? Why? Because you just want to take the expenses that you have and keep records of them because the Internal Revenue Service asks you for them. You just need to have it. Well, if that's made easy, isn't that great? But, you know, it's easier to do with the smartphones today with all these different apps. It's easier to do. If you take pictures of your food when you're eating and put it on social media, how learn the actual strategy of taking pictures of your receipts and stuff like that in your back end and have a folder there in your phone. You need a big app. You just need to produce it if the Internal Revenue Service asks for it. That doesn't mean that they will. Just if. Intent to generate a profit. Somebody has to write that down. Intent to generate a profit, actively participate, and keep records. How many people can do those three things? How many people here can do that? Is that easy enough for everybody to do? You can do that, right? You can do that. Yes, you can. Yes, you can. I know you can, right? Everybody can do that on those three things. Now, if you can do that, now, guys, I'm the business person owner. Yes, I have a corporation here, but I do have a home-based business as well. And I have time to do that. And if you can do that, guys, you'll realize that there are hundreds of potential tax deductions for you. Hundreds of them. Now, I like the word potential, okay? Because you got to do something. I like the word potential. Hey, Denise, yeah, Denise knows all about that. She has a home-based business, saving herself a lot of money, okay, in doing that, right? But there are potential deductions, guys. That's there. We're here to show you let me show you what the potential deductions can be, okay? Let me show you what the potential, because what I want you to look at now, and I'm serious about this, if you do not have a home-based business, and if you have some of these expenses that I'm going to show you on these next several slides, okay, that I'm going to start talking about and showing you, if you do not have a business and you have some of these expenses, you're losing too much money in taxes. Because even if it's hundreds of potential deductions, guys, even if it's hundreds of potential deductions, you do not have to know hundreds of them. If you become at least good with 7, if you become good at least with 7 deductions, okay? 7 deductions alone that we teach and educate can potentially save you thousands of dollars every single year in taxes. I prove it everywhere I go. I prove it everywhere I go. Only 7. Now, you can learn more because there's more out there. There's more big-time strategies out there. But 7 of them that most people are currently using can save you thousands of dollars. but when done correctly, okay, when done correctly, you have to make sure that you are doing them right. You have to make sure that you're doing them right. Let's go over these deductions. Start writing them down. Start writing them down when you actually see them, guys. If you actually have some of these things right here, let's go through them. Number one, home. Now, a home can be, a home that you're purchasing in a mortgage, or you can be renting. Doesn't matter. Doesn't matter. You have to set it up properly, because if it's a home-based business, let's set the home-based business up in your home the correct way. There's a way that you need to be able to set that business up. It doesn't have to be a whole room any longer like it did way back. No, it doesn't have to be a whole room, okay? But it has to be exclusively for the business. We help you with all of those things, right? But if you do that, I need you to understand, if you do that, look at this for a second. The first thing here, a portion of your rent and your mortgage. If you are paying mortgage or rent, let me know which one you guys are paying. Let me know. I'm gonna take some water. Let me know which one you're paying. Who's paying the mortgage? Who's paying the rent? Because it's not going to even matter. Who's paying what? Who's paying what? I'm gonna let you get it. Who's paying what? Somebody paying mortgage. Somebody paying rent. Who's actually doing that? Who's doing that? Because if you're doing that, guys, and if you do not have a business, you're paying too much money. Selena Stewart, CPA, has a mortgage. She's paying out your mortgage. She said, I'm paying mortgage. So she need what? A business. Denise said I have a mortgage. I love to see that, Denise. I love that. Okay. Deductions. Al is even rent. Guess what? Just because Al is actually renting, he get the same deduction as somebody, potentially is paying mortgage. Just a little bit actually different. Nephew Dante paying mortgage, right? A lot of people's actually renting, that's here after with me. Yeah, renting mortgage. Because guys, you can do it. Because if you're doing that, if you have a business, guess what? You're paying for your business as well, just not your living. So a portion is now a tax write-off. You're going to pay the mortgage anyway. That's the point I want you to understand. You're going to pay the mortgage anyway. You're going to pay the rent anyway. Why not turn that into a tax deduction? Heat can be turned into a tax deduction. Air conditioning. Are y'all paying these expenses? Electricity, gas, oil, water, sewer, trash collection, recycling fees, homeowners associated. I know y'all got their mortgage, got the homeowners, right? House cleaning, exterior painting, security lawns, maintenance costs. If you're paying those things and you do not have a business, guys, you're paying way too much. Now let me back up for a second. Let's talk about deductions, because some people are like, okay, no, here's what a deduction does. Let's talk about what a personal deduction and what a business deduction does. See, a business deduction, guys, will go against your income. It will go against your income. It goes against your business income first. Business deduction goes against your business income first. Then if you're an active participant, and if there's any left over, it goes against your other ordinary income, which can be your what? Your W-2 job income. Let's give you an example. If you have $5,000 in business deductions, and let's say you made per share of only $1,000 in your home-based business, $1,000 you made, $5,000 in expense. Well, the first $1,000 of those expenses is going to go against that $1,000 in income. That means now you got $1,000 tax-free, zero. You make money tax-free. Remember, these are things, this deduction stuff you're already doing. But then you got $4,000 left over. Guess what? That $4,000 now left over goes against your ordinary income, which could be your W-2 income. So if you made $50,000 that year, how about starting getting taxed off of $46,000? Are you with me? You're saving more money. Every dollar goes against that. So when you look at this screen and you notice that you have a home and you're paying some of these deductions here, you're already paying them. But because you do not have a business, you don't get the deduction. Again, we're not going to be upset with somebody making billions of dollars and paying holler nothing taxes, because we can get to somebody making $50,000, right? and they pay taxes, but somebody making $50,000 paying nothing in taxes. What's the difference? I guarantee is probably they got some type of tax shelter, tax loophole business. They're using it, paying the same stuff, but they're using it. You got to take advantage of it. Got to take advantage of it. You're gonna take over the man cave. Okay, all right. You better get approval. Better get approval to take over the man cave. Here you go. So that's the home. Okay, that's a home. Okay, that's a home. Now, how about this? Vehicle. How many of you guys got a vehicle? I know some of you guys actually don't. You may live in the cities and you are doing a lot of Uber. You're doing other transportation, as far as the train and the bus and things of that nature. Write that off too. You have a business. But if you do have a vehicle and you don't have a business, you're paying too much in taxes. You're probably paying too much in taxes because you can use potentially some tax law to help you out. You see, the Internal Revenue Service says, okay, with the proper documentation that you can combine, check this out, you can combine your personal errands along with your business errands. The same thing. Personal errands along with your business errands and deduct the standard deduction this year was 58 cents per mile. Even if you're going to see, most people go to Walmart to get supplies, groceries, and this and that, right? Most people go to Walmart, or you've gone to Walmart before. Okay. A lot of business owners go to Walmart and they buy, example, a business supply because they ran out. So they need these things for their business. So they have to leave home and go to Walmart, as an example, to get their business supply. While they're at Walmart, they get groceries. Personal errand, business errand, same errand, but the primary reason they went was business supply. It now becomes a write-off. You're just going to go there anyway. Why not make it a write-off? Guys, there's so many different examples, so many different things when you are, know some of the different laws or what you can do here with the vehicle. You can do either mileage or you can do actual mileage or actual deduction. That means actual deduction, you got your maintenance, you got, your gas, you got your cleaning the car, you got your depreciation, you got your interest. If you've been so many things there. And this year, guys, they even got bonus depreciation. Do you know that there's ways that you can have 100% of your vehicle costs to be written off? What do you mean, Terrence? You start a business this year, right now, on this date. You put your vehicle in business. That's bonus depreciation for even doing that. Start on the first year in business. They even have one if you go out and you buy a new vehicle this year for your business. If you buy it, that's 100%. So if you had a $80,000 vehicle, it has to be a certain type of vehicle, things like that. You got to qualify. But let's say, example, $70,000 to $80,000 actual vehicle, and let's say you only made, let's say, 2 payments on it for the year. You just don't have the 2 payments. You could choose to elect to depreciate the whole $70,000, $80,000 this year. Now, if you made, okay, I want you to understand something. Let's say you make $100,000 a year. You make $100,000 a year. You single person make $100,000 a year. Well, the first $12,400 is tax-free already, right? Why? Because that's the standard deduction. Your first $12,400 is already tax-free. But then you had a home-based business and you bought this vehicle, it's $80,000 vehicle. You have an $80,000 actual vehicle. You want to write it off on your first year to teach you how to actually do certain things, certain type of vehicle, how to qualify. But then you go from $100,000 to $88,000 because standard deduction is going. And now that $80,000, you can elect to take all of that as a depreciation this year. So now you only got $8,000 taxable. And you got other deductions. What do you mean, Terrence? You made $100,000. Everybody else that made $100,000 is paying taxes on $100,000. But now you basically are paying taxes on, in this example, $8,000. Your taxable income is 10% now, so that's what, $800 in taxes. But you made $100,000, but you only pay $800 in taxes. In that example. How cool is that? It's just different things that you can do You got to have a business, guys. Everybody's listening to me, this guest, you have to have one. We're going to give you some, trust me, you think this is good, just keep listening to me because the last two going to blow your mind, okay? Last two is going to absolutely have to blow your mind, okay? Here we go. Business trips. How many of you guys are going on different trips? You're going to different places. You're going on different trips. You're going to different places you're going, right? You're going to say, see, a lot of individuals say that they go on vacations. Can't write off a vacation. Okay, just around vacation. No. You know, the Internal Revenue Service has something that's called what? Business days. You need to learn how to turn the vacation days you have there into a business day. When you have a business, there's ways you can turn that into a business day. And if you turn things into a business day, right, that's 100% of your hotel stay. Potential write-off. 100% of deduction from your travels there and back. Whether you flew, okay, there and back, or you drove there and back, 100%. 100% of the tips and gratuities that you're actually giving out while you're there. 50% of your meals for every business day. You just got to learn the strategies on how to do it. If you're going to go on vacation and go somewhere anyway, why not save money? Why not save money? See, if you have taken a trip this year and you didn't have a business, all the one that's listening to me, if you have taken any type of trip this year and you didn't have a business, you just lost money. Because you can do the same thing. But if you structure property, you can save you some money. Just teach you how to do that. Remember that business intends to generate a profit, I have to participate, and keep proper records. I'm going to say that all during the presentation, okay? Because there's ways that you have to do it and do it the right way, okay? And do it the right way. That's a business trip, okay? Let's go to another one, guys. It's 7. All you need to know is 7. I'm telling you, just need to know 7. Business meals. Meals. How many of y'all eat? I know, guys, we don't eat out as much as we actually used to, actually, right? Because actually, you know, everything is going on and stuff. And we, you know, it's an awesome place that my brother told me about that I'm getting to meet from there. And me and my wife love it. We go home and we are just cooking it up actually there at the house, right? And stuff. We won't eat out as much. But if we do go out, or if you do go out, how about learning the strategy to turn your meals into business meals and write it off 50% tax deductible? If you're going to go out anyway, so there's ways that you can see. You don't have a business. Yes, you're going to go on date night. Might as well. You don't have a business, go on date night. But if you have a business, guess what business owners do? Business owners do not go just on date night. Business owners go out to eat with their business partners because they're both in the business, or they're going to meet somebody else that's in the business with them, or whatever. And now it becomes a business meeting, a business fight. They turn those things into business expenses. And when they do that, you can write those things off at 50%. You're going to take a picture of your food anyway, take a picture of that receipt. And there's certain different things on how to document it that you just have to learn how to do. Simple stuff, but it's stuff that you already do. Simple stuff, but it's stuff that I'm hoping you guys got some good notes, okay? Hope you guys got some good notes, okay? Now, don't forget about this. That's regularly just operating costs. And some of these costs are things that you're already spending money on, or you have. But you're spending money on it, 100% of them is non-deductible. But if you have a business expense, it is. Now, here's what it is. Startup costs. Number one, do not forget about startup costs. We understand that it costs to start a business. And it also costs to get some of the things together to prepare for you to have what? A business, okay? Whether you're buying, you know, an existing company or franchising or networking company or start whatever it is, you need certain things. There might be certain fees that you have to do. There's the website you got to do. Most business right now online, you got to have the internet. Well, if you're paying for the internet already, anyway, but there's a different reason why you got the internet. You got to have fast speed. You got to have this. You got to have that. And why? Because you got to have it for your business. So now that you got it for business, now it becomes a write-off. How about the cell phone? How your business is going to contact you? A lot of things are mobile now. You need that cell phone now for what? For business purposes. And do you know there's a way that you can have 100% of your cell phone being deductible? Laws changed in 2013 about that. You need to know that. Fax lines, okay? That's there. Okay. Yes, some of your product samples that, so you can have a product sample that you can actually buy the whole thing and give out, but you may not use all of that product for to give out. You may have some left over. You can use that yourself. So a lot of times you have certain things right now and you're just giving it out right now, but you don't have a business. So you ain't writing off nothing. How about do the same thing and stuff and write some things off? How about all of a sudden, you know what? You need a new computer. You thought about a new computer. Do you know when you get a business, the best time to get a new computer because you need everything updated for your business? Now that computer is a write-off and you use the 179 deduction, guys. Guess what? It's 100% write-off this year. So what kind of computer you need? Did you need a MacBook? Did you need what you need? Got to write it off. Okay. Business, home furniture. We talk about a home-based business. Don't you got to get something in a home office if you're doing presentations there? Don't you want to get, like a TV in the home office to show clients, guests, whatever? Or that's your monitor for your computer. I don't know, right? But you need consultation, stuff, and seeing. But guess what? 100% write-off. 100% write-off. If you're going to do it anyway, why not write it off? Now, pay attention to these. Pay attention. The next two, I need you to pay attention. Pay attention. Hire your own children. This is the one that we tell people that we are just getting ready to go throughout the country and talk about. I need a lot of likes on this one. I just need a lot of likes on this one. If you just give me some likes on this one because I need a lot of likes on this one. Okay. Because this is the one, guys, that you just have to do. Okay. If you have a child, especially if that child is in between the age of 7 and 17, if that child's in between the age of 7 and 17, you must take advantage of this. You must take advantage of this. And guess what? Our team will help you to make sure you do this one correctly. There's so many people that have kids out there, and you're spending so much money on your kids. You're spending so much money on your kids right now. They're in all the activities that they're in now. They're in AAU. They are in, basketball, football, volleyball, gymnastics. Y'all name some of them, right? Gymnastics. What else is it? Okay, here's another of them. Sheila Max said that she need a child. Now you don't. Okay, it costs a whole lot more, Sheila, than the tax deduction. So we're not going to do that, right? We're not going to do that. But if you have one, and especially then between the age of 7 and 17, the reason I said 7 and 17, because here's why. Okay, 7 and 17, you can end up, Melissa, you can end up actually, hiring your child, labor laws. They can work for the parents. Okay, they work for the parents. When they work for the parents, okay, they are exempt from certain things. First thing you need to know that they are exempt from, guys, is Social Security tax. Okay. 7 to 17, you ain't worried about the child labor laws. But guess what? No payroll withholding. That's that Social Security tax if they're under 18 years old. No Social Security and Medicare. So they can make money if they're working for their parent, and they don't have to pay Social Security nor what? Medicare. Now, remember I also said earlier about, if they have the single and the standard deduction of single person is $12,400, right? That first $12,400 is tax free. So technically, a child of yours can make up to $12,400 tax free, no federal, no state taxes, and then exempt from Social Security and Medicare. No taxes at all that they can make if they're working for their parents. And here's the cool part. You are paying somebody. You are paying them to do certain things. And we got a whole plan to teach you exactly how those things. There are rules, okay? There are rules, okay? Or what they, either do, how much pay them, stuff. There are rules. You got to stay in line with those rules. But here's the thing. You are paying them. You pay them. They don't have to file taxes on it. You get 100% tax deduction. Remember, deduction goes against what? Business income first, and then what? Ordinary income. If you're paying them anyway, how about paying your child to help you in the business, and it's a home-based business, stuff they can do. We got you through that. And they don't have to pay taxes and stuff on that money. You get a write-off. And all of a sudden now they got money. Now they pay for their own AAU expense. They pay for their own clothes, their own school items. You're going to pay for that money anyway. Guys, do you see what's going on? Same money that you're paying now. Same money. And this is per child. Per child. Per child. I need y'all to understand that. Per child is what that is. You have to take advantage of this. Y'all need to be sharing this thing like crazy just off of that. I'm telling you. We're going to get you off at the end, but I'm telling you, that is huge. That's absolutely huge. Now, Miss Mac, Sheila was actually talking about she needs a child. She needs a child. No. You don't need a child actually for that. But we got one actually for you, actually, Sheila, next. Okay? Because the next one is, guys, is about healthcare costs. Most people have some type of healthcare costs right now, whether it's insurance or kind of drugs, this or there, whatever it is, they got some kind of it. But this is one when, works very good. I'm going to give you actually one example of how it works actually very good. So you have what? Spouse. How about to be able to hire your spouse to work for your business? Okay. Now you're paying a spouse. Now your spouse is over 18 years old, so they got to pay Social Security and Medicare. So you got a little bit more paperwork to do, right? A little bit more paperwork to do. Okay. So they got to do that. However, you can potentially put in place, okay, a policy for your business. Let me tell you what it is, HRA, okay? And you can put in place for your business that you can write off a lot of things potentially. Insurance premiums, okay? Because it's a reimbursement. Insurance premium and your deductibles, your co-pays, okay? Orthodontists, your holistic member. So you go to the chiropractor, you go here, you go there, write those things off. How about over-the-counter drugs? Yes, your Advils, your Claritins, all the if you plan them correctly, guys. Again, if you are spending this money anyway, if you're spending this money, if you bought something in the medical field in 2020, had to spend some money on something, it could have potentially been a write-off, even if it's a gym membership. You know that, guys, you lose a lot of money. So we're not going to worry about what somebody, no, right now, we're going to basically say we're going to position ourselves to start saving money. And we're going to start off with the taxes. We're going to start off actually with the taxes. Y'all agree? That's what we're going to do. Now, let's kind of sum these things up real quick, because I need you to understand this. Because I started saying that, guys, these are things that you're already currently doing. No extra money, no extra thing you have to do. All you need is a business with the intent to generate a profit, actively participate, and properly keep records. Intent to generate a profit, actively participate, and properly keep records. If you do those things, you can qualify for have a legitimate home-based business, okay? And then you got to learn the rules, guys, to be able to take off. Just even learn these 7 things right here. Home office deductions, mileage deductions, business meals, business trips, business operation deductions, son and daughter employment deductions, and medical expense deductions. If you do that and become just good at those, just those, $3,000 to $6,000 per year in tax savings, is that worth it? If that's worth it, okay, that's worth it, guys. And that's just those deductions, because there are a lot of many. There's a lot of other ones. I said a lot of many. Y'all heard that, right? There's a lot of other ones that's out there. A lot of other deductions that's out there. You can just start naming them. If you're doing, you just got to actually learn all of those. Absolutely huge deductions as far as doing. Okay. Now, you should be thinking right now, and I hope you are. You should be thinking right now, what business should I get? Because it has to be business that qualify for these type of deductions. And you should be thinking that. I hope you're thinking that. What kind of business should I get? I said a lot of people's going on, okay? A lot of people still logging on and stuff to come around. And you're thinking, what business should I get? There's a lot of different things out there, okay? A lot of the different businesses out there. Your main thing, intent, active participate, keep proper records. Now, I have to actually say right now, okay, I have partnered with MWR Financial. I counsel so many different people in different businesses, a lot of great businesses out there, and there's a lot of bad businesses out there as well. Let's be honest, right? A lot of good, a lot of bad, okay? But as I work with thousands of clients throughout the country of different ways, different tax strategies and training and stuff, I want to have something that I can say, hey, everybody can plug into and do, okay? And the company that's right now, guys, is MWR Financial. MWR actually Financial is awesome as far as a person being able to actually get a business. Affordable cost is $228 one time. $228 one time. That's the startup cost. Remember, that's a what? Write off. And there's $120 a month, including their product service that they actually have, which is a financial product. $120 a month. Okay. And that's a total what? Write off. But here's what I really like about this company. Okay, not just its financials, and people really need, financial services coming, but they have experts that do all of the work for individuals. So it's a great marketing product because y'all know that a lot of people need financial, or will need financial services, from tax and credit and debt and retirement needs and all those things and more. They need those things. So it's a great business and doing great things anyway. But let's look at the tax deduction part of it for a second, okay? The tax deduction part of it is like this. I just showed you just 7 deductions about how you can have a business and save a lot of money in taxes. Do you know that MWR basically actually has it that the tax savings and their savings for their products, if you go through their what they call the plan of action, and if you do not save or make more money than what their business costs monthly, okay, which is $120 a month, right? Do you know that you get 100% refund for that company? They will refund your money back if they're not saving you more than what the business costs. I like that because they want to make sure that everybody is profitable. I need you to get that first. Because problems come because it's like, wait a minute, they want to get good things, to get financial stuff. They need a business anyway. We already got that done. You need a business anyway. Then they're going to say, you know what? We know this is a chance thing, but you get their business. They're going to guarantee that you will save more money than the business actually costs. Just go through their plan of action. And if you don't, they'll give you a full refund. Okay, they give you a full refund. Remember, it's $228 to start, $120 a month. Okay, starting on the second month, right? Because that $228 includes that first month of that $120. We're doing so. So I like that. Now, if I like that and I start looking at it, guys, how many people do you know that needed to hear this information, that needed to hear that they needed a home-based business? A lot of people that need a home-based business now that don't have one. Or they may be in some and tried some of this stuff, but they just paying so much money in taxes, okay? Dude, how many people, let's even target it even more. Let's go to another target. How many people that you even know that have kids in between the age of 7 and 17? Know somebody? Don't you think a lot of those that may have kids between the age of 7 and 17, do you think that they may have a vehicle as well, or a car as well? You think some of them may be paying something about healthcare as well? Do you think some of them have cell phones? Do you think that they're either paying rent or mortgage? I'm saying that to actually say, guys, this company, MWR Financial, is basically saying you refer those individuals to get the home-based business, and they can help those individuals. But here's what I like about it. Here's what I like, okay? Here's what I like about this. Do you know one of the products that they have is going to help that person in their home-based business? Notice how I said through this presentation, if you do certain things right, okay? If you do this, there's certain ways that you have to actually structure. There's certain ways that you have to hire your kids. Certain ways you have to hire your spouse and use this. There's certain ways you have to do your trips and stuff like that, right? See, a lot of people get a home-based business and they heard about different things they can write it off, but guess what? They do it the wrong way and mess up everything. Then the IRS audits them and boom, they're in trouble. How about one of these services, just one of these services within the MWR Financial Edge membership that they have, that will be including your monthly membership, is unlimited tax advice from my staff. unlimited tax advice, whether it's chatting it up, okay, okay, whether it's phone calls when you need unlimited advice. See, you got to understand, we want to make sure people are getting the right information about property running a business. And then they pay you guys for the product, and you refer people, you refer people, you refer people that need a business. We are trying to help everybody to pay their 750, right? Don't say that. Everybody can't pay 750, okay? That don't happen. But you can save a lot of money on your taxes. Pay as less as you can. That's the goal. Pay as less as you can. You're going to pay taxes, okay? But pay the right amounts. Save some money. So they have the whole thing going. So this is what I want you to actually do, because I had to show you MWR Financial, and I'm not showing you that tonight. But I want you to basically reach out to the person that somebody's maybe here that is sharing this on their watch party. I need you to get back with them, okay? Inbox them real quick. Inbox them actually real quick, okay? Inbox them. All right. So when you like inbox them, guys, and and just to let them know, you need to see a presentation of MWR, about a 20-minute presentation, to learn just a little bit more about the company. Okay. That's what I need you to do. Whoever site that you got this from, you see them, send them a message, send them a text, send them a call, whatever it is, but get back with them. Look at a presentation of MWR Financial. Okay. If you decided to make MWR Financial your choice of business as well, okay, and you get the membership, you have access to our staff, access to me as well. Why? Because we're going to make sure that you start your business the right way. You're going to, make sure you're in line for those startup costs, being a write-off, their home office expense a write-off, right? The trips, knowing about how to write those things off, how to write off gifts the proper way, like holiday gifts that's actually coming up the proper way. Right? How to basically put your car into business and doing that. And then once you make money there, you need more advice about how to save. It's about saving and saving and saving and saving money on your taxes. Okay? And don't get me wrong. Okay? It's good to have to save a lot of money and stuff and do it for have to save money on your taxes. But yes, there's people in this company that's making some serious income, because we do have a strategy. So ask them about the strategy also, about how we have people to save more money on their taxes than the business costs, so then the business for free, and how they can generate a 6-figure annual residual income as well in the business portion by helping us to spread this message. Sounds good? Sounds good. Guys, I am again excited for actually being on this call. I see a lot of you guys actually on the call. I want to thank each and every one of you for actually coming out to listen to me today. Guys, I'm going to be here again actually next week, but I want you to get back with a person that invited you so you can get started in your business. Your deduction start the moment you have a business. Do not wait. You need to be emailing them or texting them or calling them tonight so that you can get into a business, or just get into a business so you can have those write-offs, okay? And guys, if you actually join, I'm going to be the first one to actually welcome you to MWR. I'll be the first one to actually welcome you to our team, Team No Limit. We got a lot of resources actually for you guys. I'm there to actually help you out and stuff like that. And I want to thank each and every one of you for actually joining us on this presentation. Okay. And with that being said, this is T Hawk, and I'm out. Have a great day, guys. Goodbye.